Hey, sit down. Scream louder than that. Get up. Get off my bus.
They soon realize that their lives are about to change forever. Every enlisted member of the world's finest fighting force begins their transformation on the same iconic yellow footprints. Not everyone standing here will earn the title of U.S. Marine.
The Marine Corps' success depends on teamwork. Therefore, teamwork is an essential part of your training here at Paris Island. From now on, you will train as a team. You will eat, live, sleep, and train as a team. The word "I" is no longer part of your vocabulary. Do we understand? Yes, sir!
To do so, they must pass through the most demanding recruit training in the world. Not everyone is cut out for it. Over the next 12 weeks, they will be tested more than they could have ever imagined, physically, mentally, and emotionally. The training is intense and uncompromising, but they will find parts of themselves they never knew were there. They will be broken down and rebuilt from the ground up as a disciplined, motivated, and dedicated warrior for their nation. They will be United States Marines. Within minutes of their arrival on Paris Island,
What are you at? Bring it up here. Say aye, sir. Aye, sir.
The new recruits surrender the last physical remainders of their past identity as a civilian, such as candy, snacks, cigarettes, and for the men, their hair.
Look, take the thinking off your neck and relax.
Welcome to the receiving phase. The receiving phase is made as confusing and disorienting for the recruits as possible to help distance the recruits from civilian habits and to prepare them for Marine Corps discipline.
The initial meet and greet, or when the drill instructors are introduced to the recruits, is basically a culture shock to basically have them in the mindset of what they're going to be doing here in recruit training. The recruit training is 70 training days, and there will be transitioning into those training days as Marine Corps recruits.
The Marine Corps' success depends upon teamwork. Therefore, teamwork is an essential part of training on Paris Island. It is to replace the thought of self with the thought of the team. Before training can start, each male recruit must be able to do a minimum of 2 pull-ups, and female recruits must be able to do a flexed arm hang for 12 seconds. Both are required to do 44 crunches in 2 minutes and run 1.5 miles in under 13 minutes and 30 seconds for the men, and the females have 15 minutes to cross the finish line. Recruits are advised to report to training with the ability to run much further distances at a faster pace, as the IST run is only half the distance of the 3-mile physical fitness test required of all recruits. After passing their initial strength test, Marine Corps recruit training begins with a moment these recruits will never forget. It's time to meet their drill instructors. They are the backbone of the Marine Corps, demanding perfectionists who monopolize every waking hour of the recruits' lives. Every second of every day will be spent with these drill instructors, who will mold them into Marines. They will instill in them, through their own example, the utmost levels of professionalism, teamwork, discipline, and confidence. They really do make Marines.
Meet Chris and Mark. They've both heard of Bitcoin and Ethereum. While Chris is using
The next 3 to 5 days is the period known as forming. It is nothing short of learning a new language, a new culture, a fast-paced way of life that starts with the willing obedience of every order. Recruits learn a complete new way of speaking and use language and terminology they will use throughout their entire time in the Marine Corps. The drill instructors physically, psychologically, and mentally challenge the recruits, including yelling at maximum volume and intimidation to simulate the stress of the battlefield and to elicit immediate compliance to instructions. Marine Corps recruit training is broken down into 3 basic phases. Phase 1 lasts approximately 4 weeks. Here, discipline will begin to be instilled in recruits by disorienting them and breaking them from old civilian habits and mindsets. Drill instructors begin reinforcing the mental and physical standards needed to perform under stressful situations that could be experienced in combat. The purpose of Phase 1 is to mentally and physically challenge the recruits. At this point, civilian habits are completely detrimental to training, so they are eliminated during this period through intense physical training, strict routines, discipline, and intense instruction.
It is on a debate. It is on a debate.
The process is designed to enable recruits to learn to survive in combat situations and to adapt and overcome any unexpected situation. One of the principal ideals learned during this period is that recruits are not to think of themselves as individuals. They are not permitted to use the first-person pronoun, I. Instead, recruits refer to themselves as this recruit, and
All right. Good morning. We are getting ready to get started here. We're going to start with our morning PT. So if you're able to turn your cameras on and participate in the physical training we're going to do this morning for 1 minute. 1 minute PT drill. All right, we will begin. Now, the only way you're going to be able to succeed in boot camp is you participate and track out and do everything that we were talking about on this boot camp journey. And in 30 days, you're going to see the results. All right. You got to learn how to be corny in order to be successful. Don't worry about looking crazy. Just do it. Let's go. Jumping jacks. Right in place. High knees. Toe touches. Touch your toes. Touch your toes. Reach, touch your toes. Reach, touch your toes. 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 Elbows the knees. Elbows the knees. Elbows the knees. Elbows the knees. We got 10 seconds left. I'm gonna run in place. High knees. High knees. 3 minutes. 2 minutes. We are done. All right, I'm motivated, pumped up, ready to go. All right, I hope y'all fired up for this journey this morning. We're gonna have some good training this morning. That was some good PT. Start our day out the right way. And again, you know, you want to do the PT session on your own that we came up with. That'll be that step deck training. And then 3 sets of flutter kicks. And then 3 sets of sit-ups. And 3 sets of hello dollies. All right, let's go.
Do the rich people cringe and say, "Don't tell them that, Robert"?
Yes. Don't tell people what you know. Keep them poor. My father was the head of education, PhD, all that stuff. I go home and ask him, said, "Why don't we learn about money in school?" And he looked at me and says, "Because the government doesn't let us teach that subject. The government tells us what we can teach and what we can't teach." And I thought that was strange. And I said, "But aren't we going to school to learn about money?" He says, "No, your job is to get a job." I said, "But you get a job to earn money." He goes, "No, you're supposed to just get a job." I went, No. Isn't the purpose of a job to earn money? He goes, "You're correct." I said, "So why don't I just learn about money? I can skip the job part, you know?" And he got flustered and he said, "If you want to learn about money, why don't you ask your best friend's father about money?" And I said, why? That's Mike. So why ask him? He says, because Mike's father is an entrepreneur. And I said, what are you? He says, I'm an employee. I'm a government employee. I went, oh, what's the difference? He says, the difference is an entrepreneur must know about money, or they're no longer entrepreneurs. And he says an employee doesn't have to know anything about money because the government will take care of them, the company will take care of them. So I'm all confused. But I took my dad's advice and I trundled over to Mike's father's office and knocked on his door and I said, hey, I'm here, 9 years old. Teach me about money. He says, beat it, kid, you know. But that's where the story of Rich Dad, Poor Dad started. And finally, through persistence, my rich dad started teaching me about money on one condition. And that condition was he would never pay me. He says, the moment I pay you, you think like an employee. He says, that's the trap. Entrepreneurs work for free. And now I'm 9 years old, my head's going cracking in half. He says, you never want a paycheck. You understand that, kid? I said, okay, I got it. And he says, well, how do I make money? He says, that's what entrepreneurs figure out. It's like, so how do I learn about money? So he would just break out a Monopoly game board. So I would work for free and pick up cigarette butts, and he had hotels and restaurants that I would clean and do menial tasks. And as I got older, I started getting into office work and marketing and accounting. And I was an apprentice basically, but I always worked for free. And he would teach me about money. But the way he taught me about money was playing Monopoly. And finally one day I got upset. I said, well, when are you going to teach me about money? He says, what do you think we're doing? We're playing Monopoly. He goes, no. What do you think we're doing? We're playing Monopoly. He says, what do you think we're doing? So I don't know. I'm teaching you about money. And then that's when, you have one greenhouse. He says, there's many formulas for great success in money. There's thousands of them. But one of the best ones is found in the game of Monopoly. It still is today. 4 greenhouses, 1 red hotel. I said, what? He says, one of the greatest ways to acquire great wealth is playing Monopoly in real life. 4 greenhouses, 1 red hotel. Is that all there is? He goes, that's it. And he says, what do you think I'm doing? And I went, I don't know. So then he took me out. He showed me his greenhouses. And 10 years later, when I was 19, I was now in school in New York. And I come back to Hawaii. And Rich Dad had bought the biggest piece of land smack dab in the middle of Waikiki Beach. And when you go to Waikiki Beach today, you'll see the Hyatt Regency Hotel. That was his hotel.
Just like the game of Monopoly.
Just like the game of Monopoly.
Acquired assets and they became bigger assets.
He just kept it was called an assemblage because that property wasn't that big at that time. So he had to buy out all the small guys. Because Waikiki was a little dirt water, little town. So he'd buy out this shop owner and buy that shop owner. And it took him a while, but he finally assembled this large piece of property. And then he and Hyatt put up this giant hotel. It just sold for $800 million. So that's how I learned about money. I've had financial crashes. I've had people stab me in the back, but they're all good because I grow from it. That's spirituality. People who are afraid of making mistakes, like they teach in school, they don't ever grow. Because spirituality is there's good and there's bad. There's right and there's wrong. There's up and there's down. Most people only want to be right. They only want to be positive. Well, you can't have that. That's not reality. Well, I wasn't poor by most people's standards, but I came from a family with a poor attitude, if you know what I mean. Because rich, poor, middle class, poverty starts with a fundamental attitude. Poverty is passed on. It's taught in your families. And middle class is taught in families. And so the people right now who are sitting at home, who are struggling. Hi, this is Robert Kiyosaki, and we'll talk to you about an opportunity to learn to be an entrepreneur. Financially, or worried about money, or unhappy. They may be making a lot of money, but unhappy with what they're doing. It was probably taught to you. Your super ego was taught, get a job, work hard, or you'll never be rich, or the rich are evil, or whatever. The school system will never teach you about money. The school system was designed to teach you to be an employee, which is important, or a doctor or a lawyer, a specialist, but never about money. And what most people lack is real business knowledge, like accounting, like debt, like taxes. You got to know that stuff, but they don't teach it in school to anybody. So, and then when people ask me, how did your rich dad learn this when your poor dad, a PhD, didn't? And the answer is very simply, my rich dad, who's like my best friend's father, his father died when he was 13. So his rich dad had this family business at 13 to run. So he had to drop out of school, which was his blessing. There's blessings, and sometimes a blessing doesn't look like a blessing, but it turned out to be a blessing. And then his teachers became his bookkeeper, his accountant, his attorney, his banker, his real estate agents. So he has what I call real teachers, not these fake teachers in school. You see, most teachers in school, they're out of ethics. They teach subjects they themselves don't practice. I asked the teacher, I said, I'm in my third year of calculus now. It was called strength of materials. I said, am I ever going to use this stuff? He goes, no. I said, why do you teach it? Because I get paid. I said, do you ever use it? He goes, no. And that's why, you have to, in life, one of the things I suggested people, you got to find a real teacher versus a fake teacher. And a fake teacher is somebody who doesn't do what they teach. And a real teacher is doing what they teach every day. So my accountants, my attorneys, they're in it every single day. That's how I learn, because every day I'm solving problems in my business. So I have accountants and attorneys and bankers and all these people on speed dial because I'm solving problems with my team.
I see you giving this knowledge out, and
yeah.
Do the rich people cringe and say, don't tell them that, Rob?
Yes. Don't tell people what you know. Keep them poor. But, unfortunately, the poor, as was in the Bible, I'm not real religious, the poor will always be amongst us because it starts up here.
Right. It's that fear mentality.
It's in their words, and the words become flesh. Again, I'm not really religious. I flunked out of Sunday school also. But when they say I can't afford it or I can't do that, they go down. They become what they say. My PhD dad, he says, what do you think I am, made of money? I can't afford that. And my rich dad would say, that's why he's poor. Poor people say, I can't afford it, I can't do that, I don't have time. Because it's an escape. It's an escape. You know what I mean? It's easy to say, I can't afford it.
And your rich dad used to say what instead of, I can't afford it?
How can I afford it? How can I do that? What would it take? Or why should I do that? He says that a question opens the mind, a statement closes the mind. See, when you say, I can't afford it, your mind shuts down and you become what you say. Rugby is a team sport, but so is soccer. The rules are different. And other people are golfers. They play by themselves. And so everybody's different. So my game financially is business, number one. Second is real estate. So what I say to young people is, you find your game.
Okay, I hope you guys got something out of that, especially when you think about school and what we're up against when we go to school. It is nothing but subject matter stuff, right? Not real substance stuff we can use in real life after school. So right now we're learning a skill set that we can give to our children, our community, our loved ones, things like that. So it's all about what you do with what you're getting here. So if you master this skill, share it, pass it down. Because again, it's all about you breaking barriers, you not having that poor man's mentality of, I want to stay in the same bracket or whatever. I don't know what bracket you all are in, but to excel, you got to think that way. Look outside the box, apply every day to this stuff, and you're going to master this. All right, let's get it.
You can do it on any broker platform. If brokers change from time to time, you're not relying on a broker.
You're not relying on another person. You're not even relying on the Go Live educators. You have obtained a skill that no one can ever take away from you. And that is powerful. That provides the independence to be able to go out and do life on your own and to catch those financial fish and be able to provide for yourself. Very, very important principle. And so that is our goal in these particular sessions, is to help you learn how to fish and gain that financial independence. And as part of that, we want to help you develop the right mindset. And so we begin with this thought today by Warren Buffett. He says, successful investing takes time, discipline, and patience. No matter how great the talent or effort, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant. Don't mean to demean anybody's intelligence, but it typically takes about 9 months to have a baby, right? And so he kind of makes a point here. He says you can't produce a baby in 1 month by getting 9 different women pregnant. He says, in other words, you can't cheat the system. You have to be able to spend the time in order to learn to master the skill. And on top of that, a great deal of trading is simply waiting. And so it requires patience. As we're looking for trade setups, as we're looking for price action to do what we want it to do, ultimately it takes patience. You're waiting through the candles to form. You're waiting for that structure to set up for the right opportunity. But here's the good news. As you develop that patience and as you see those trade setups take place, the reality is you don't need 100 trades in a day. You can actually make decent money in this business with just a few trades in a day. You just need a high win rate. Okay, that's how you ultimately make money, especially with an HFX, is we need to see that 60, 70, 80% or better win rate in order to be showing profits consistently with your trading. And so that's why on our flyers, we encourage that 70% or better and so forth, is because ultimately what that means is profitability. These people are making money. Second thought I want to share with you is this. The way I look at the markets is very much from a scientific kind of objective approach. And the reason being is because we want to create consistency with our trading. And I had this thought quite a while back about Newton's law. Newton talks about laws of motion. And they can call it laws of inertia and so forth. But he has these 3 laws, and it's basically summarized like this. Newton's law teaches that an object in motion stays in motion until acted upon by an unbalanced force. So in order for us to predict the price direction, we want to identify the forces at hand. In other words, the forces that are impacting the price movement. Price is constantly moving up and down, but you need to understand what is causing it to move up and down, and how do you identify which force, the up or down force, is being more powerful at that given moment so that you can accurately predict the price direction. And so to do that, I want to talk today a little bit about market volume as well as volatility. Now, volume really refers to you and me, and it refers to the number of orders that are being placed in the markets at any given moment in time. The more people who are placing orders, the more volume that there is in the market. And if you get a bank or a large institution who's placing very, very large orders or transactions in the market, that's going to increase the volume. That increase in volume has a direct correlation with volatility. More volume you have, the more volatility you have. Volatility is simply defined as how big the wave patterns are in the market. So let's give you some basic examples. So in this, I want you to envision kind of a tug of war, and constantly between buyers and sellers. Because there are literally millions of people and institutions who are participating in the markets on a daily basis, there's constantly a differential of belief systems. In other words, some people believe the price is going to go down. Other people believe that the price is going to go up. And they're all basing those assumptions and those beliefs based on different points of data and based on different time frames. For us, for example, in HFX, we may say price is going to go up, or we believe that price is going to go up within the next 5 minutes. But that may be counter to maybe the institutions are saying price is going to go down over the next week. So the length of time that they're considering as part of their overall trade placement may be very different from ours, but we can actually both be correct. It may go up in the next 5 minutes, and it may overall go down in the next week. And so there's this constant kind of pull back and forth between buyers and sellers that create price fluctuations in the market. And so this top diagram here, where we have only a few people participating in the market, that's what we refer to as low volume. And you're also going to see low volatility. And I'll show you some actual examples in the market where you will see this and how you can actually identify this, but even by looking at the candles. So the more participants we get in the market, as more people begin to participate, we get an increase in volume, and it's like the same tug of war. It's still pulling price in one direction or the other, but there's many more people involved. And so what that does is it creates more tension, but also more stability in the market. We have an increase in volatility, meaning the price will go further in one direction or the other, but we're not going to see the erratic, spiky kind of movements that we would normally see during a low market or low volume time of the market. And that can be illustrated in this particular chart here. So we have on the left side of this kind of vertical dash line here a low volume time of day. This is between it's 3 o'clock and about 4 o'clock p.m. Mountain Standard Time, our time, so which would be about 5 to 7 p.m. Eastern Standard Time, roughly in that time frame. Each day this occurs where the markets aren't necessarily closed, but there's it is closed for gold and for US 30 and other things, but for the currencies, it's just you get a lot of this erratic movement. And the reason for this is because everybody stops trading. The institutions stop trading. This is kind of timeout where everybody just stops. And so you begin to see very low volume erratic activity. And so when you look at all of these candlesticks, one of the things that we begin to notice is that we see a lot of small, tiny candles. These little ones where there's just, maybe you'll see a wick, maybe you won't. Sometimes you'll just even see a line. Sometimes these are referred to as dojis. Sometimes they look like a little plus sign. But ultimately, there's just no movement, either up or down, candle after candle. They all have these same exact tops here. And then occasionally you'll have these erratic long wicks, and then price will immediately go back to where it was. And so this occurs because there's very little market volume. There's very few participants in the market. And so if you can imagine a market maker or a broker saying, okay, anybody want to buy, anybody want to sell? And eventually one guy says, hey, I'll put in a buy. But in order to make that happen, the price has to jump all the way to the point where that person wants to buy. And that's what these wicks represent. It jumps down, fills that order, and then goes right back to where it was at. And so that's that low volume kind of movement. Now, we want to avoid those times when there's low volume in the market. Why? Because when there begins to be more participants, as you see on the right side of the screen here, there's more participants. All of a sudden, all the candles are much larger, and there's more consistency. It doesn't mean you don't see wicks on the candles, but there's more directional movement. This is all very flat, very erratic. Onto the right side of our screen, we see much more nice wave formations in the market. So this helps provide a stability in the market and a predictability. So when we're looking at price action, breakout or retest, and these kind of things, ultimately we're going to see much more consistent price movement behavior. And in HFX, this is particularly important because sometimes one of the main complaints that we kind of hear that people at times struggle with is they may be trading during a very low volume time of day, and they say more the market is very spiky. Some people refer to it as cardiac because they're seeing kind of these erratic spike movements on the line chart, up and down, up and down. And they're totally right in that the market can behave like that. It's not necessarily broker induced, it's just low volume activity. And so, but the take home message here is that if you happen to come across a pair that is behaving like that during a certain time of day, what you want to do is just move to a different pair. All right. If you're on the euro dollar and you see it behaving like that, move to a different pair. But here's the additional good news is that most of the time we can predict when these times are during the day. For example, in the early afternoon between 5 p.m. and 7 p.m. Eastern Standard Time, you can convert that to your own time zone. There's generally some slowness to the market. And so you're going to typically see that. We also often see this during pre-market conditions when there's just not a whole lot of volume activity. Now, that first hour or two before the market opens, you are going to start to see some pre-market trading going on between the institutions. And so you are going to see an increase in volatility and volume during that phase. But anyway, the point, though, is that the times where you see really low volume and thus low volatility, these are not good times to trade because price is not moving in a direction. How do we make our money within HFX? Ultimately, by predicting price direction. So we need price to move somewhere. We can't have it just stay at the same location, candle after candle after candle. We need it to go somewhere, right? And we don't want to rely on luck to get a last minute spike in, or it could be bad luck that it often is going to spike you out. Again, that's not the broker trying to get you. It's just trading in low volume conditions more often than not. The other time where you'll often see kind of this erratic movement is on kind of unpopular, meaning that it's lower traded exotic currency pairs. So currencies out there that just aren't the primary ones that people trade. For example, the euro to US dollar, that is the highest volume traded pair in existence. Okay, so there's more people, there's more institutions that trade the euro to US dollar because those are some of the main currencies out there throughout the world. And so if we look at other currencies, exotic currencies, for example, I spent a couple of years in Madagascar. Madagascar has the Malagasy francs. We've probably never traded the Malagasy franc, neither have I. And most people probably don't. And so if you looked up the chart for the Malagasy franc, it would probably be very erratic and very unpredictable because there's just not a lot of people who are trading that given currency. And so make sure to trade the primary main currencies out there, and you'll have much more stability to that market volume as well as that volatility, and you'll find you'll get more consistent results with your trading. All right, so to jump into this next phase, as it relates to market volume, ultimately, again, we make our money making an accurate price direction prediction with a given time expiration. So this is time sensitive. And as I mentioned, a large institution, they may be making a longer term prediction. They may be saying, hey, price is going to go up over the next week, 2 weeks, month, 6 months. They may be making very long-term predictions. So the placement of their trades will occur based on higher time frame charts, and that's great. That's fine, and they can be accurate in those. While at the same time, we can be very accurate on very short-term time direction predictions. Okay, where price can move up over the next 1, 3, or 5 minutes or 15 minutes, and we can be accurate even amidst a higher time frame trend that is actually counter to what we're doing. And so let's look at some actual examples of how we then kind of keep in mind market phase within market phase. And when I say that, ultimately each time frame is going to have its own phase. You may see a downtrend on the 1 minute chart, but then when you jump up a time frame to the 5 minute or 15 minute chart, you're going to see that you're maybe in an uptrend, or maybe you're in a state of consolidation. And so I'm going to show you just on this chart here, and we'll show you a couple different currency pairs, how you could go about looking at a couple of different time frames just to kind of keep that overall perspective in mind of where you are at in space. Because if you know where you're at in relation to some of these phases, ultimately you're going to have a better idea for where price might go next. All right, especially if it gets to kind of a key level within a given time frame, and I'll explain what that means here in a second. So right now we're on the 1 minute chart on gold, and again, this could be any currency pair. It does not matter what pair. If we type in the euro to US dollar, for example, ultimately you're seeing a bunch of candles and you're identifying current phase. So it really does not matter what you're looking at. All currencies, all stocks, indexes, everything is basically the same in how they move. All right, so if we're identifying current market phase, if we kind of zoom out and we say, all right, what is price doing here at the given moment? Well, if we're trying to base our trade decision on current data, we don't want to look at everything that's been going on during. Let me grab a little arrow tool here. We don't need to be considering all of this price movement activity, because ultimately, if we're placing a trade that's only going to be for the next 3 to 5 minutes or 3 to 10 minutes here, we only really need to pay attention to current price movement activity. We want to look at very recent data, and that's why we can be correct in predicting, say, a downward move on a very short-term time prediction, even if we're in an uptrend on the 1 hour time frame chart. Okay, and so we want to consider current data. So as we look at this, what do we ultimately see? Well, right now, we can see that price is a bit in a consolidation phase. We know this for a couple of different reasons. If you consider price action, which we talked about yesterday, are we seeing any kind of breakout and retest in this area here? We initially had one breakout. Okay, we had a breakout from here, retest, breakout, retest, but then the market has since gone kind of sideways, and so we're not getting any further breakouts. And we know that price will generally do one of two things. This is another concept that we talked about yesterday, which is price will either reverse off of either the bottom or top previous pivot point in the market, or it's going to break out to the downside or the upside and continue in the direction of the breakout. So when we look at this chart, we could see initially, hey, we had a nice breakout to the upside. We got our retest, another breakout to the upside, retest, and a little bit of a continuation. But then the market has had no further breakouts to either the upside or the downside on either of these pivot points. So for right now, we could say pretty definitively that on the 1 minute time frame chart, according to current price activity, we are in a consolidation phase. All right. So, but how does that relate to higher time frame price activity? And so let's delete some of this data here, and let's jump up a time frame. Now, as we jump up to each time frame, ultimately we're looking at the same data, but just with less details. Kind of like flying up in an airplane. You're still looking at the earth, you're still looking at the cars, but everything kind of slows down a little bit. If you stand on the freeway, cars are zooming past you. It feels like they're moving really, really fast. But if you fly up in the air 5,000 feet, okay, in an airplane, and you look down at those same exact cars, it's going to appear as if they're moving quite slowly. And if you go up even further, up 30, 40,000 feet in elevation, ultimately those cars are going to look like they're barely even moving. And so similarly to that, when we look at a 1 minute time frame chart, and we look at a given candle, which is showing current price movement activity, it's going to feel like it moves a little bit faster. But when we zoom out, it's going to look more and more like it's moving slowly. So let's jump up to a 5 minute time frame chart, and let's look at current price data and see what phase are we in, generally speaking, on the 5 minute time frame chart. And so within this, I would say that based on current data, the question is which data are we looking at? How far back do we really want to look? And so we have a lot of price movement activity way back here, but is current price responding to this? No, it's not. We want to look further up, okay, closer to current price movement activity to see what's going on. And so we want to identify what are the most recent pivot points in the market that we can use to identify what price might do next. And so we have a pivot point here, so where price came from down here up to here, and then it changed direction. So it starts to come down. We have a nice new pivot that matches this one, comes up, breaks down a little bit, and then it's come back to this level. And so for right now, we have two pivot points in the market that we could say price is respecting, and our second low pivot point is down in this general vicinity here. Now, a lot of people are asking, well, do we base this line on the wick? Do we do it on the body? Look at an average point, okay? Wicks are generally kind of filling orders on the outskirts of price movement. So, you want to just kind of consider generally, again, when you're identifying market phase, you're not looking for the exact entry point yet. And so be a little bit liberal with where the top and bottom of your pivot points are. One way that you can do this in addition to utilizing candlesticks is you can actually change your chart to a line chart. So if you come up to this candlestick icon here, come down to line, that will change it, and you'll see those same changes in direction at that point. All right, so if your eyes have a hard time seeing it on the candles, you can go to a line chart, and that'll help clear that up for you a little bit. So from this point forward, what are we seeing? We're seeing that we have kind of a top overhead resistance here, and then we have a bottom resistance over here. So price currently is right in the middle, right? So that guy. So price is currently right in the middle of that. So do we have any additional information as far as what price is going to do next based on our 5 minute time frame chart? No, we're kind of in the middle of this consolidation phase. We don't have really a breakout to the downside. We don't really have a breakout to the upside. So for right now, the M5 or the 5 minute time frame chart is not giving us any further information as to where price is going to go next, other than the fact that there is this space right here between price and our next resistance point. Because when price is in the middle, it can either go down and reach this lower resistance area, or it's going to somehow get to the top and touch this area. It most recently already did touch this top, so it's likely going to push down, and it's going to bounce off some other form of resistance before it goes in the next direction. And so as you can see, price is making its way back down to this resistance area. And so that's where we want to maybe potentially look for a trade opportunity. So even if we're considering a trade opportunity that is based upon a 1 minute time frame chart, let's just say you want to place a 3 minute trade, which would follow our 3 candle rule approach. Ultimately, we want to keep in mind, hey, on the 5 minute time frame chart, we have a resistance level here. So if we jump back down to the 1 minute time frame chart, note how price is moving down. So we could consider potentially that there might be some price rejection activity occurring down near this level. So we want to keep an eye on potential candlestick formations or other trade entry reasons as to what price might do next if it gets down to this level. Okay, so we're again, you can kind of see how you can begin to utilize multiple time frames to identify not the exact moment where you're entering the trade, but just the general location and where you're at in space in relation to the higher time frame market phases. So we identified that on the M1 we were in a consolidation phase, right? So our consolidation was basically right there and right there. So what does it look like we're getting at this point on the M1? It looks like we're actually working into potentially a breakout to the downside. And so that might suggest that we're actually going to get further down movement. But how far might this go? Potentially just to our M5 resistance line, which is closer to down in this zone here. Okay. So that's how we can go about utilizing multiple time frames. So if we jump up again, we kind of identified that, hey, we went from consolidation to now potential downward breakout on the M1, M5. We're still in consolidation as far as I can tell. And just to make that very clear, we've got a top relatively at that level and a bottom pivot here at that level. And neither one has been broken. In other words, we don't have a breakout either to the downside or to the upside yet. So if we jump up further on our time frames, let's see what additional information that can tell us, if anything. So let's jump up to a 15-minute time frame. So at this 15-minute time frame, again, we want to consider what data are we considering as part of our objective trade decision. And once again, there's a lot of price movement activity here, but what are the recent pivots telling us? Okay, you want to just kind of keep track of your pivot points, say, okay, what are we seeing on these top and bottoms where price is changing directions? And then you can begin to draw some lines and say, well, there's a relative top here where price is not breaking above, and our most recent pivots is right at that level as well. And then on the bottom, it's kind of similar. We had this pivot here, and ever since that point, price has not broken down below that. So if you're looking down at the M1, what might we want to pay attention to? So if we jump all the way back down to the M1, we're saying this is not only an M5 resistance level, okay? I'll zoom back to the M5 just to make that clear. So here was our lower pivot on the M5, but it is also an M15 level of resistance, because you can see in all of this price activity, like we have a kind of a nifty little tool here. If you take this tool here, which you can find over here on the left side of your screen, it says date range, all right? You can actually redo that. You can actually go from this point, the first time the price reached this level, and come all the way out to our current bar. What does it tell us? 86 bars. This is 22 hours and 30 minutes. So in other words, in the last day, price has not broken down below this level. So is that a decent level of support or some form of resistance causing price to not go below that? Absolutely. So what will price likely do when it comes down to this level? It's likely going to respond and continue in the upward direction. Now, we can use additional technical indicators to help further that evidence. We could look at, for example, the RSI, which is one of our favorite indicators for measuring momentum and strength. And what do we see? As price is near this lower Bollinger Band, our basic rule for trading a consolidation zone is that if the RSI number is inside of the 1640, which is this green dash line, and the top red dash line, those are 60% and our 40% levels. Okay. So ultimately, as price gets to that level, if we're still inside here, we could consider a call option. All right. But knowing that we might be in only a 3 or 5 minute trade, we can't base the trade exclusively on a candlestick pattern or other things on the 15-minute chart. We need more detail than that. So what will we do? Again, we jump back down to our 1 minute time frame chart, get rid of this guy here. And we want to see, okay, well, what are we seeing on the 1 minute? Well, first of all, price has not gotten down to that lower level yet. We also have a breakout to the downside below our M1 previous level of consolidation. And this is why I say that the most important data ultimately that you're going to base your trade decisions on is the time frame in which you're basing your time expiration. If you're placing a 3-minute trade because you're using a 1-minute time frame chart, ultimately you need to be looking at the 1-minute time frame chart. If you're placing a 15-minute trade on a 5-minute time frame chart, then you need to be looking at the data of your 5-minute time frame chart and look at the candlestick patterns, all those things, or other entry reasons that we would use for those trades. And so, but we can keep in mind, and you'll see Matt Thayer and Millie and all the educators do this, they'll kind of identify a little bit higher level time frame resistance. In this case, this is an M5 level. This is also an M15 level. And we'll continue to jump up our time frames to see if that's further supported by any other time frame. But ultimately, we could say, hey, this blue line here is a 15-minute time frame chart resistance level. So that's pretty good. That means there's a lot of resistance that's going to push price back up. But we want to look at what price is doing on a 1-minute time frame chart to base our actual trade entry reason. So in other words, if price comes down to this level, we want to see what is going to happen at this level. We want to look at the RSI. If the RSI is well below that 40%, it's already started to push below 40% here. And so if that continues to push down and we see this RSI line way below 40%, chances are this is going to have the strength and momentum to continue to push down below this level. No phase lasts forever, and that M15, even though this has lasted for the last 22 hours and 30 minutes, this could be the moment at which it finally breaks through. And so when you're considering your trade opportunities, you want to look at current data based on the time frame chart that you're basing your time expiration. In other words, if you're placing, like I said, a 3-minute trade on a 1-minute time frame chart, make sure you're looking at that data before you place it. You don't want to place it just exclusively because you see on the 15-minute chart that, hey, there's some resistance there. Because, yes, you may be correct that there's going to be a bounce here, but in how much time, right? So you could be correct, but if it takes 10 minutes for it to actually respond and to reverse back up because you were looking at a 15-minute time frame chart, well, it may not have given you enough time in a 3-minute trade to actually win that trade. So the time expiration is kind of a sensitive factor in our overall trade consideration. Okay, so let's jump up another time frame here. Kind of scrunch this up. For a second. All right, so we've been on a 15-minute time frame. We've clearly identified that there is definitely some level of resistance there, right? Okay, so now we'll jump up a time frame. Let's go up to the 1 hour. What do we see here? Again, we're looking at the same kind of factors involved. And so as we consider the different pivot points in the market, you'll note that during this long uptrend here, we had some nice kind of breakout retest structure, very consistent. And then we had a nice boost to the upside, a nice breakout to the upside, retest to this previous pivot point here, a nice continuation. And then the market began to consolidate, all right? Kind of go sideways during this phase. And then out of the blue, boom, we had this huge candle. What does this candle mean? Well, when we're talking about volume, right, ultimately we mentioned before how as you get more and more participants, you're going to have an increase in market volatility. And one of the things that you will see sometimes in the market is maybe sometimes it's a news event or just an increase in participation, typically by the institution. You don't typically get that instantaneous retail customer activity enough to create this kind of dramatic drop all at once. And so typically when you see these really large candles that just go impulsively in one direction and then correct and go right back to normal, almost as if it had never even happened, typically this is institutional trading. Some people would call it institutional manipulation. You know, you can call it what you may. It's not really manipulation. It's just a lot of selling activity all at once. Maybe they placed $4 billion worth of sales right in that hour, and it caused the price to drop significantly. Okay, so during certain news events, sometimes that occurs, and the banks simply take advantage of kind of that hype or the sentiment that people have during news events, and you'll see the market respond accordingly. But usually those are very short-lived. As you can see, there's just within a couple of candles, this was right back to normal. And so do we need to be afraid of these kind of movements? Really, we don't. We're not trading long enough time frames to really be that concerned with them. But if you are concerned, you know, Millie and I know a lot of the educators teach how to go about identifying those news events and just kind of be aware of when they are so that you don't get caught up in them and have that kind of ruffle your feathers. And so mostly the take-home message that I'd like to point out, though, is that we don't really consider these large movements as part of the overall market structure. Because as you can see, yes, it pushed way down. What did it do? It came right back in line with where it was at, and then it sort of kept going. All right. So that news event was, you could almost consider it an anomaly, and that is not part of our overall market structure in terms of predicting future market behavior. And so what we see on the 1 hour time frame chart, if we're identifying market phase, we're either in a trending time or in a consolidation. Here we can identify that we had a nice uptrend. Right? At that point, we see consistent breakout retest market behavior, very clean, very typical, very classic, and a nice breakout to the downside. Came back up, retested to this level, very typical of trend line behavior, and then we're back into what appears to be consolidation. So at this current moment, what information can we derive from current market phase in the 1 hour time frame chart? Again, we're not going to consider this as a big part of our overall market analysis. Because this is one of those anomaly news events. Instead, we're going to look at current and most recent pivot points, which are all kind of in this zone here, and where would our bottom pivot points be at that same level here. So what is this telling us? If we compare our 1 hour time frame to our 15-minute time frame, you'll note that the top and bottom of these pivot points are relatively the same location. So what does that tell us? Ultimately, that tells us that this bottom pivot point here, okay, this bottom resistance line is a pretty strong point of resistance, at least for now. The market will tell us, though, on the lower time frames when it is ready to finally push beyond. But for the time being, we can consider this to be a very reliable level of structural support that we can consider call options. So when we're looking at price down at these levels, and you're in hourglass and you're looking for arrows, when price comes down to that level, you could consider an up arrow, okay, if you get one. And so at that point, that's what we want to be looking for. And again, but because we're basing our trades on a specific short-term time expiration, 3 minutes, 5 minutes, 10 minutes, 15 minutes, something in that range, ultimately we want to note the level. We've utilized 4 different time frames: the 1 hour, which suggests we're in a consolidation phase; 15-minute suggests we're in a consolidation phase; the 5-minute suggests that we're still basically in consolidation, not based on this top pivot point, but I would say these 2 previous ones. So you can see this kind of narrows our scope of movement, because we're no longer having to worry about this level of resistance here up top, because price is way far away from that, and we have other resistance points on a lower time frame chart that we're basing our trade decision on. So let's jump down now to the 1 minute time frame chart. This is the area where we're actually basing our trade decisions. We're going to start to analyze what price is doing based on certain technical indicators of what it might do next. So here, we previously identified that we were in an M1 consolidation zone during this phase here, between this blue line and this blue line here. And what did we get? Nice breakout to the downside, retest, and now price is moving down. So we're going to pay close attention to what does price do when it gets down to this level. Why would we do that? Because ultimately, all of these higher time frames are suggesting that this is a very important level that price is responding to. And one of the additional kind of ways that you can kind of narrow in your analysis is, as you look at this blue line here, I want you to pay attention to what the actual price is. You see, the markets often respond at round price numbers, okay? And so right now, our blue line is at 1885.672. All right, that's a very random, kind of uneven number there. It's definitely not a round number. And so if we take our line, we say, what's the next closest round number here? If we went down to 1885.500, okay, we'll get that as close as we can, right about there. You'll note that that makes it much more specific and precise to where price was really responding to it, okay? And so we want to know, what is price going to do when it gets to that level, as well as we also have a pivot point here right before price is pushing down. We also have the RSI pushing well below 40%. So now if we're making a case for what price will likely do when it hits this level of so far, this is suggesting that maybe we'll get a bounce off of it in the short term, but we could get a retest at this level and the price could go in the downward direction. So it will either see something like that or potentially price will just break on down through. If we get a significant downward breakout, that might become the new overhead resistance. And likely what we would see, if we kind of zoom this out a little bit, is we might begin to see price pushing out beyond, retesting to this level, forming new overhead resistance before it begins a new trend. You see, no phase lasts forever. And so you kind of want to begin to pay attention to where those phases change and what evidence do we have to suggest that those phases are changing. So if we see the RSI well below the 40%, if we see a breakout to the downside below this level, then we could consider further put option opportunities as the trend continues to go the downward direction. But until that time, really we're saying this is a pretty strong support level. So we could consider a trade opportunity, a call option at and around this level. And so we could look for different trade entry reasons for that. So that's basically kind of a top-down analysis of how we can go about utilizing multiple time frames to identify key support and resistance levels. Because the number one question people ask us is, number one, when do I get in the trade? But also, where do I get in the trade? There's so many candles. How do I know which one is the candle that I'm supposed to get in at? And so a lot of the educators, when you watch them, they just keep it simple. They say, you know what? I'm going to identify a few key levels of support. So let's just say they jump to a 15-minute chart here. They say, all right, well, it definitely looks like we have kind of a lower support line, generally at this level. We've got an overhead support line or resistance line at that level. That's the 15-minute. They could jump up to the 1 hour. They see it's basically the same. Jump down to the 5-minute. They could narrow that a little bit. They could say, okay, based on this, we have certainly that one, but we also have these two here. So that's showing a little bit closer overhead resistance level. All right. So, but based upon these levels alone, you'll see Matt Thayer, you'll see Millie, you'll see DL do this all the time. They're looking at these kind of key levels and they say, I'm going to base my trade on that alone. And so they could take that call option right there and they do it maybe for 2 minutes because they only need a bounce. When we're placing really short-term time frame trades, as price came down to this level here, they could wait for it to come all the way down here, or they could wait and say, hey, when this comes to that 185.500, let's get this back to that level, which is right about there. Okay, they could say, we're entering a call option at that level because that's kind of that key level that price has been responding to repeatedly. All right. And that's how they can win very short-term time frame trends, even if this continues in the downward direction. Because as we mentioned, we have a nice breakout here. This breaks out to the downside. So this may retest and then just push on through. But they may be basing their short-term trade at just calling a call option at this level based upon a support level. That's confirmed and supported by multiple time frames. All right. So based on a 2-minute trade or even a 3-minute trade, I say 2 minutes because I know DL that uses 2 minutes. So at this point here, you would have already won the trade. You enter a trade at 5:00, boom, you already won this trade, either based on a 2-minute or a 3-minute trade. You'd be in profit the entire time. And so you ask yourself the question, well, how would he have known that that was an important level? And it's because of a little bit of top-down analysis, just looking at these key support and resistance levels, which are based upon pivot points in the market. Simply looking at those pivot points in the market gave us from past data, what price will likely do in the present time. You see, we're not really prophesying the future. Nobody's pretending to have any kind of magic potion or skill or magic indicator that automatically is going to tell them where every winning trade is. But you can see, as in this example, through some very simple analysis, all we're doing is identifying a few of these key pivot levels where price has responded. And we're saying, what will price likely do it? Well, based upon, like I said, our 1 hour time frame chart, Price hasn't broke down below this level. Based upon our 15-minute time frame chart, we zoom out, price in the last 22 hours has not broken below this level. And so if it has not done it in the last 22 hours, there's a pretty darn good chance that it's going to bounce off of it again. So trading really becomes as simple as that, identifying key support and resistance levels, and then utilizing some simple indicators, technical indicators, to further confirm your trade opportunity, looking at price action based on some shorter time frame charts. Okay, so here, what are we beginning to see? Already, we've got, again, that RSI well below 40%. We've got the breakout to the downside, looking to retest, already showing some additional downward movement. This could be the very moment that we begin to see a breakout to the downside and for a new trend to form on all of these previous time frame charts that we were just considering. So people ask us all the time, we want to look over your shoulder so we can see what you see. This session right here, folks, is exactly what we see. These are the things we're looking for. These are, you could say, the secrets, which are not really big secrets. It's just practicing the fundamentals, being able to see some basic market structure, these top and bottom pivot points. Utilizing multiple time frames can be helpful. Don't go overkill on it, though. You do not need to analyze, 5 or 10 different time frames in order to identify the location where a trade might take place. You don't. All right. More often than not, when Brandon and I are executing our own personal trades, we're looking at 5-minute time frame chart and 1 minute. We use those two by themselves because it's that most recent data that's going to suggest where the price is likely going to move next, especially on the shorter time frame trades that we're taking. And again, if you are a little bit nervous, if you happen to be on a broker that doesn't have a rollover option and you're a little bit worried that, hey, when I place a trade, if I'm not in profit and I can't roll over, I don't want to end up losing more trades just because I didn't have the rollover feature. With those, one of the things you can consider is that if you're on an educator call, let's just say they're doing a 3-minute trade opportunity, you could take a 9-minute trade opportunity or something like that. Increase that amount of time initially. Yes, you're going to be stuck in the trade a little bit longer than they might be, but you're already kind of buying yourself that additional time so the price can ultimately go in the direction that you're predicting it will go. Okay? That's how we go about doing that. So, so that's a little bit about market volume, market volatility, making sure you're trading during the right times of day, and don't get too hung up about that. Again, it's usually during that 5 to 7 p.m. window, Eastern Standard Time, where you'll see a little bit of that erratic movement on most currency pairs. But overall, you're not going to run into that a ton. If you happen to be looking at your line chart and you're just seeing a lot of spiky movement, jump to a different pair. Don't worry about it. And so you can see here, look at this. I just love this. Look at this kind of breakout. Okay, we already identified on the M1. We got this breakout to the downside. We get a nice retest. This very well could be the moment where this breaks below what has been a support level for the last 22 hours. It'll be fascinating to see if this plays out like that. But all of the signs are suggesting that price does currently have the momentum that it could do that. You see what I'm saying? Because the RSI is well below 40%. That's what we are basing our trade decisions on, is what is the current data suggesting? Yes, we would have won this early trade based upon kind of an arbitrary entry. But how long did that last? We got 3 little candles and already price is moving down strongly. Because you see price has already essentially made its decision when it had a breakout here that showed us early on that there could be further downward movement. So hopefully find some good value from that. We're going to continue this discussion as we go throughout the week. We're going to be talking about different technical indicators that can help further confirm that overall market structure analysis that we're doing on our trade opportunities. And then we'll be talking about trade entry reasons, that exact moment and those objective reasons why we're going to enter a trade. We say objective because we don't want it to be based on a hunch, on your emotions or anything that's going to fluctuate from day to day. We want you to be able to say, I've got the sign, I'm in the trade. That will help you cut emotion out of your trading and you'll find more consistent results as a result. And with that, Brandon, I'll turn the time back over to you.
All right, guys. Hope you got tremendous value out of that. I know that a lot of you were putting that in the chat, and we definitely appreciate that. Again, we are on 5 days a week, same time.
Okay, you guys, anybody got any questions about anything?
Question, Boom. I don't know if I missed it. Morning. I don't know if I missed it because I was in and out with my other meeting. But I noticed you wrote in the chat where he said not to trade when there's low market volume, right?
Yes.
Exactly when does that happen?
That's between 5 and 7 p.m. Eastern Standard Time.
But that's when the market is closed in general anyway. So we don't trade at that time at all anyway.
Well, the market is open.
Oh,
The market begins to move like on Thursdays, right? We come on at 7 on my session at 7 p.m. and there's very little movement at that time. So it's a little more difficult to find those breakout moves.
Okay.
Yeah, so I normally don't like to trade at that time. 8 o'clock p.m. for me is the best time.
8 p.m.
Yeah, you get some market movement at that time. And then of course I trade in the morning as well, between like now and 10 o'clock. It's also another time that I trade. Okay, everybody. So our time is up. It's 8:30. Tomorrow we're gonna have the same thing, and tomorrow we'll do a little prac app. If anybody wants to share their screen and show some markups, and also go over what we're learning so far, is how doing your line chart, things like that, and adding that new tool that he showed you, that data range, the date range. That'll be this tool here. Let me go back to add it to my toolbar. So you want to practice using this tool, you can, to kind of see how far the market has been in the trend. Let me erase it and put it back on the consolidation. Move this out the way. So this is the tool here. Let me erase it. So if I want to see how long it's been in this phase here, that's 2 days, 7 hours, and 45 minutes. It's been in this consolidation phase, and then finally it broke out. So it's a pretty good tool to use. Something different, as well as switching your chart from candle to line chart. The candles right there. So we also learned that today. So now you can see the different levels of support resistance, and you can see there my zone here is very strong. Same thing down here. So the line chart just makes everything more clearly for you, and you can kind of go back and forth when you're trading. All right. Thanks you guys for joining today. I will see you guys tomorrow. And again, practice, practice, practice. Don't forget to do your PT and your homework, doing 5 charts a day and placing those charts in the all for profit chart markup group for analysis and feedback. All right, you guys have a great day. Bless you.
Hi.
Have a good day. Thank you.
All right.